Back, it's time for Options Corner. Joining me now, senior markets correspondent for the Schwab Network, Kevin Green. KG, you got your eyes on some of the flows. What are some of the levels that you have on your radar?
Yeah, well, going into the close, we might be looking at more of a tight range kind of going into the close here if we're able to hold up at these current levels. To the upside, looking at 59.60, there's over 113,000 contracts that are traded at that level today. So that can be a pretty big area of resistance kind of going into the close. And then to the downside, you can look at 59.30. I would say that there is probably some pen risk still around these levels, 59.40 to 59.50-ish. And then moving to the upside here, any type of breakdown, 59.30 would be kind of on the radar here, but we've had some really decent gains, kind of backed off just a little bit here, Alex, as we are kind of going into the close, but obviously having a nice little rebound after seeing those overnight losses going into the morning. We saw some really aggressive buying activity taking place early on, maybe some short covering when it came to the futures just in general. And today you just seen some positive inflows pretty much across the board when you're looking at the equity space. I don't have a chart here, but I do want to kind of highlight CoreWeave is a stock that we'll probably bring up tomorrow morning and or tomorrow during the close. A lot of flows going into that stock as well, and it's moving like 8% on a day-by-day basis. That's one that is kind of sticking out to me outside of the index options that we talk about on a normal basis.
Yeah, that recently public AI stock really getting some big movement. I love the call out. Kevin, for those who check this out daily and they're watching this segment and they're really trying to follow what you're talking through when we're looking at some of these levels, you mind giving us a kind of an idea of how traditionally we'd expect the levels to interact? Like when we work towards this dealer positive pressure, is that going to act as resistance? If we move towards this negative dealer pressure, is that like a trap door? What does the textbook tell us, all else equal, we should do if we hit these levels?
Yeah, so what we are trying, and I'm going to try to do this fairly quick here. So the positive and negative levels here, if you're looking to the downside, we are making the assumption that all puts in the market that are being traded are being bought, which is obviously an assumption that we're making that's really not true, but that's really the baseline when you're trying to follow flows. So if we have individuals that are buying puts, dealers are going to be, short those puts. And so their dealer exposure is to the downside. They do not want to go through a particular strike price in order to try to hold up for now. That's the same thing with the upside. We look at this positive dealer pressure area here. We're making the assumption that all calls are being sold by individuals and all dealers are going to be long those particular calls. So there's a lot of kind of different methods in order to be able to try to calculate this out, but you're basically looking at the volume that is there sitting at a particular contract and then trying to calculate out the difference between the call activity and the put activity. When you're looking at gamma exposure or even vega exposure, you can look at pretty much each one of the Greeks, and you're trying to net out to see what's the net going to be. Is it a positive or negative? And is that going to be enough exposure to potentially have a dealer actually taking action in order to try to defend a level? And is this going to be a level where everybody else is really focusing on it as well? So as we kind of look at it this morning, we were talking about the 5,900, 5,905 level as your first area of potential support. And we have this chart up right now. The reason being, there's actually a significant amount of positioning sitting at the 5,905 level. And we've been highlighting this for the last couple of trading sessions. We've been flushing to the downside here. We went even below 5,900, but you saw some buyers really stepping in very aggressively, defending that level, not going through and staying and remaining through it, pushing to the upside here. We also highlighted 5,950, which was an area of resistance until we popped up to 5,960-ish or so, which is there's once again going to be some closing risk or some pen risk at 5,950. So we're just basically looking at all of the options that are being traded at each particular strike and netting out whatever the exposure is going to be from the Greeks and the larger exposed areas, if you will, is what we're really highlighting where upside, you could have some defending, or basically to the upside, you could have dealers basically trying to push prices down, contain prices. To the downside, trying to push prices up. This really works in a positive gamma market, but you're really trying to keep price levels compressed. And then dealers make money basically off the spread and theta decay. That's the thesis on this whole thing.
Yeah, all else equal, how I've always understood it, I think you did a good job of walking us through, is as you have them laid out here, as you'd work towards those green areas, the positive dealer exposure, think volatility compression, the dealers have a long gamma, they're getting longer as the market's going up. They want to keep it towards neutral. They're going to sell into that rally, compress volatility. But the opposite's true when gamma flips negative, and it almost acts as if it's a trap door. And you can see, like similar to how the market reacted in the past, how it can quickly flush when it starts moving to the downside. So volatility accelerates and expands as dealer gamma gets negative. Kevin, as we look out through the end of the week, you expecting much? It's light economic data, relatively light earnings. I know we got Fed speakers. Anything in the positioning or technicals that has your attention?
Yeah, a couple of things. Kind of want to highlight, it's not only just downside, though. You could actually have these breaks or these gamma squeezes to the upside. If you're able to break through a particular level aggressively enough to really trigger the acceleration of buying activity. So you're right. You get out of those bands far away enough from those bands, either to the upside or downside, you could actually create more of a buying catalyst or a selling catalyst. We traditionally, when we see these negative gamma situations, actually see selling catalysts or breakdowns in the market. But in very strong bull markets like we've had over the last year or so, you actually do get excessive buying or call pressure or call buying activity that can create these squeezes. GME was the biggest example of that. A couple of things that I wanted to kind of go through here. The industrial sector is actually hitting new all-time highs. I think that's actually very interesting. 2 weeks ago, we kind of talked about this flag pattern that was taking place, this potential breakout to the upside for the industrial sector. And this is if you're looking at the S&P 500 industrial index itself, not the XLI, which the XLI, for the most part, is about to make all-time highs as well. But industrial is making new all-time highs. The first sector to do so after the tariff bear market is actually a very interesting development, because if you look under the hood, there's still a lot of industries within that sector that are still lagging. If you're looking at, we just talked about airline companies and of that nature earlier this morning, transportation companies and things of that nature here. But this is the first sector to actually make new all-time highs. I find that very interesting, to say the least. And you also have utilities on the cusp of making new all-time highs as well, only down about 1.3% from all-time highs. Two sectors you usually don't see kind of making fast and quick recoveries to make new all-time highs in a new bull market, but an interesting dynamic.